Anthropic is approximately 10 weeks from its confidential S-1 filing, moving toward a targeted Nasdaq listing in October 2026. This transition ends the era of flexible private fundraising narratives. Under Section 5 of the Securities Act, the company must provide unredactable disclosures that cannot be paraphrased or summarized. The S-1 has to say what the S-1 has to say. Currently, the valuation landscape is fragmented. Secondary markets report implied valuations exceeding $1 trillion, while prediction markets suggest a floor closer to $560 billion. Modeling the probabilities within the impending filing, institutional pricing is expected to cluster around a risk-adjusted midpoint of $750 billion. 7 specific, currently opaque variables drive this trillion-dollar valuation delta. The S-1 will legally force these facts into the light. This waterfall model establishes our analytical baseline at the $750 billion midpoint, scaling toward secondary market highs or compressing toward prediction market lows. Final pricing acts as a mathematical output determined by audited disclosures in top-line accounting, capital risk, and structural governance. To price the world's most scrutinized AI IPO, institutional allocators must look past the headlines and model the specific permutations of these upcoming disclosures. The most consequential disclosure concerns Anthropic's $30 billion run rate revenue claim. This figure sparked an internal dispute, initiated by OpenAI's chief revenue officer, accusing Anthropic of overstating its top line through aggressive accounting. The dispute centers on the ASC 606 principal versus agent test. When Claude is sold through third-party cloud channels like AWS Bedrock or Google Vertex, auditors must determine who actually controls the service before it reaches the customer. Under gross reporting, Anthropic books the full end-user spend as revenue, treating the cloud provider's share as a cost. This inflates headline numbers. The alternative is net reporting. Here, Anthropic only books its specific partner payout as revenue, significantly reducing the recognized top line. Path A sees auditors affirming the existing gross reporting. This leaves the $30 billion ARR intact, supporting the valuation premium. Path B involves an SEC-mandated restatement to net reporting. This would shrink the headline revenue and likely trigger immediate multiple compression. Path C provides disaggregated disclosure, where Anthropic reports gross revenue but explicitly deducts partner payouts. This forces the market to price the company off its newly visible net margins. These revenue figures intersect with Item 1A customer concentration rules. We will see if the Amazon or Google channel relationships breach the critical 10 or 25% dependency thresholds. Any forced restatement to net revenue or disclosure of dangerous hyperscaler concentration would require an immediate and significant haircut to the $750 billion baseline. On a standard balance sheet, Anthropic appears highly capitalized, with roughly $30 to $35 billion in external capital raised through May 2026. The audited reality lies in the MD&A contractual obligations table, disclosing the 5 gigawatt AWS Trainium compute commitment. These off-balance sheet operating commitments represent a hidden $30 to $60 billion drain on future cash flow through 2030. This debt sits alongside a $19 billion annual burn rate, split between $12 billion for training and $7 billion for inference. The S-1 will also reveal how Anthropic disaggregates its R&D. The company has the choice to separate fundamental model training from its alignment and safety research expenses. This number provides a litmus test for their safety-focused brand. If alignment spend is below 5% of R&D, the positioning is largely marketing. If it exceeds 15%, the safety commitment is a core organizational reality. The 2027 free cash flow target depends on revenue acceleration at rates that consistently outpace these massive computing costs. Profitability is a race between this off-balance sheet compute gravity and the company's ability to maintain hypergrowth without constant dilution. Strategically, Anthropic holds a sole-source federal channel for frontier defensive cybersecurity via Project Glasswing. This is a high-margin, uncompetitive revenue stream. This moat is complicated by the Pentagon's supply chain risk designation, applied to the company in February 2026. Section 4 of the S-1 must detail the status of this litigation, including the recent denial of a stay by the appeals court. The specific phrasing of this risk will act as a direct constraint on the IPO's upper pricing limit. Investors must also evaluate the long-term benefit trust, a non-standard governance feature that most tech IPOs avoid. The trust holds a class of stock mandated to prioritize the long-term benefit of humanity over standard shareholder returns under specific conditions. The S-1 must disclose the exact triggers that allow the trust to override fiduciary duty. Wall Street prizes predictability. If the filing reveals triggers that allow safety mandates to routinely override quarterly profits, the market will aggressively discount the offering. Integrating these variables produces a joint probability distribution across 3 distinct pricing outcomes. Scenario A, pricing between $800 billion and $1.15 trillion, requires auditors to affirm gross accounting, manageable customer concentration, and favorable litigation outcomes. Scenario C, dropping to the $350 to $550 billion range, results from a forced revenue restatement, high off-balance sheet drag, or an institutional rejection of the trust governance structure. Upon filing, Anthropic's audited revenue and growth figures will function as the strict valuation benchmark for OpenAI, xAI, and the entire global frontier AI economy. Allocators should move past secondary market headlines and immediately run comparable company analysis using these specific impending S-1 disclosure permutations. The final valuation of the Anthropic IPO is mostly determined today. In 10 weeks, the S-1 simply forces the market to read the math.